Okay, I'm recording this video after close of trade Monday, 30th of August 2010, and we ended up closing down 20 points, and wouldn't you know it, we're back down in the 1040s. Let me just show you, this is daily chart, the E-mini here, just showing the day session. And for me, the most interesting point about today was we kind of closed down on extremely light volume on a 1.2 million contracts traded. The Dow volume was extremely light today, so was the Nasdaq volume and so on. And it kind of looked scary towards the end, but I'm just wondering if we're kind of just another kind of spike down. This could well be a no supply day where we kind of spike down, not a lot of sellers, and we kind of bounce tomorrow. So the next day, maybe 2 days, is going to be absolutely critical. So, we're on this knife edge again, back down here at this kind of 1040 type level. We had these kind of on Friday we had kind of the rally after the marginally better than expected kind of GDP numbers, and we found resistance up at this kind of 1065, 1070 level, which is the cyclical resistance support level on the daily chart. And on Monday we just couldn't punch through it, and so things are not looking good from a cycles perspective. Let me just show you the better X trend indicator. So this is the volume-based trailing stop here. Showed this over the last couple of videos, and here's what I was talking about on this kind of down move where we trail a stop down based on exhaustion down bars. So similar to this last kind of move down, the trailing stop kind of gets pulled down as the exhaustion bars kind of develop through a move. And so now up at 64.50 we've got this trailing stop. If tomorrow we break above that and close above that, then that would put us in an uptrend on a volume trailing stop kind of basis. But this could mean that 64.50 is a real resistance area, and that the downtrend's kind of going to continue. So again, tomorrow's real make or break. We need to close above that type, the high of Monday, in order to confirm that we got kind of change in trend. Otherwise, just looks. I mean, we've just tested this 1040 level so many times. Flash crash once, twice. Poked through it once and kind of rallied up, but we never rallied up, past this 11 kind of 20, 25 type level, and we're back down here again. So, the bulls just don't have enough bullets to push us through into an uptrend. Then just looking at the sine wave indicators, I've shown you the monthly chart. We're kind of a downtrend on the monthly chart, and here's the weekly sign here. So because we've got a new bar forming for this week, I mean obviously the week's not over, so we've still got a ways to go for this to form. But we're at this kind of critical juncture with a cyclical cross here, and we're back down at this kind of pullback level forming. It's basically saying that time's run out in order to have this up leg. We got halfway there and then we kind of came back down again. So we could easily just close below this on a weekly basis, and then that just means we're into a weekly downtrend, and that would be extremely weak. If we go to the daily chart again, just we're closing below here. We weren't able to punch through this kind of cyclical support that's now become resistance. So if we break below yesterday's Friday's low into some kind of a downtrend, that would be kind of a kissing this kind of level, and then we're away into a downtrend. And then if we look at the 135-minute chart, so the three of these bars per day session, we've come back to this level, resistance, support becomes resistance, kind of kissed off it just up there. We're coming into a cyclical cross on this, and this will be a pullback. We're in a downtrend here, pullback and a downtrend, and then an end trend after this. So all of that's looking extremely weak. The only saving grace for me was that today's volume was really light at 1.2 million contracts traded. That's kind of showing a lack of sellers. So potentially, this is a little bit of a support area, and we'll kind of bounce above it tomorrow. But we need to do that on fairly good volume and break above this 65 level in order to convince me that we're going to have a little bit of a run to the upside. Just looking on the long-term tip bar charts, here's the 40,500 tip bar chart. I said on Friday I was kind of in two minds as to, or had no real opinion basically on Monday, which way we'd kind of go. As it turned out, the cyclical turning level, cyclical cross, and the cyclical turn here on the 4,500 tip bar chart was kind of key. So in the Sunday night kind of overnight session, we kind of pushed above 1070. It was all done on amateur volume. You can see it's an amateur up bar, yellow up bar, bearish divergence, a Rambo pattern there, so that's a reversible amateur breakout, so a potential. reversal of an amateur breakout. The amateurs are driving this breakout, and so when we break below the low of that bar, it says that potentially that breakout's a false breakout. We kind of move to the downside here. Coming into Friday's trade, we had these kind of professional blue bars here. Got a similar pattern lining up on the downside here. This is actually, we're coming up to a cyclical turn on the better sine wave on this time frame. I haven't shown it on the chart here, but we are coming to form one there. We've also got kind of all these professionals kind of coming into these lows and a little bit of an amateur bar at the bottom there. So, as we've kind of made a head and shoulders type pattern here, and we're kind of testing again. It's not great that we'd have been testing this low. You'd have thought that something like the previous, this type of level at 55, so that this level here, about 10.55, if that had caused us, a natural area of support, it had been kind of support and resistance on the Friday. If that had kind of been a support level on the Monday, I've been far more bullish about the uptrend was kind of still in place. But because we broke through that and had this kind of big sell-off. But the amount of selling volume that we've had has not been greater than the exhaustion selling that we had previously, and we could be lining up for another flush signal here on the better momentum indicator. So not sure about that. Just looking at the other charts on the euro here, said that we were Thursday, Friday looking extremely weak on the euro, and we kind of fell away. It's just a real lack of buying volume on the euro at the moment to go push us any higher. And then on the other markets, this is the 30-year bond contract here, coming into a cyclical turning level here. And again, this is extremely weak buying up here at these highs, pushed up into a Rambo pattern on the close on Monday. And potentially, the bonds could be starting to roll over. Now, if the bonds kind of rolled over and then the money was flowing into equity, that would make kind of sense. I would expect the bonds to be looking a lot stronger at this point if we were going to have the equities kind of just totally fall out of bed. But we're kind of making testing of tops here at this 135 type level, and the amount of buying that's going on is extremely weak. We've got these kind of bearish divergent signals here. We've got a cyclical turning point just forming on this. We could be seeing a similar pattern than we had a couple of days ago, whereas we're kind of testing these highs. So if the bonds kind of go south, you'd expect some of the that money to flow into the equity market. So potentially, with that no supply or very low selling volume, potentially there is a little bit of a move to the upside. And then crude looks pretty strong. We've had our kind of exhaustion buying at this point to set this move off. We're kind of hanging around these levels here at 74, just under 75. Potentially we could be breaking into an uptrend here, which would make sense for a continuation of the rally. And then on copper was extraordinary today. There's just really light volumes. You can see, this is a tip bar chart, and each of these is a day session between these kind of vertical dotted lines. I look at the copper prices, but I don't trade it, and I'm not sure. The day session here, the lines are extremely close between each other, which means the volume was extremely light. So it's not as if a lot of people were just rushing for the exits up at this 340 type level. So we've not had exhaustion buying at this point. So copper's looking better and crude's looking better. So potentially the rally's still on, but as I said, make or break, kind of we're on this knife edge again. We need to be seeing some real strength tomorrow, and the cyclical turn on the highest time frame tip bar chart kind of holding and us starting to rally tomorrow. If not, we're going to drop through this 1040 level and we're going to move into a downtrend, and I think that's going to be quite violent, kind of trending to the downside. So watch out for tomorrow.